Hello and welcome to the Brooks Macdonald podcast. I'm Henrietta Walker, Head of Investment Specialist Team, and I'm joined by Co-CIOs Mike Toolan.
Hello.
And Rich Larner.
Hi, good afternoon.
So today we're going to talk about our market views and positioning in the light of Trump's Liberation Day, which was, of course, Wednesday, 2nd of April. Last Wednesday's tariff announcements from the US were considered to be pretty much worst case scenario. The US will impose a minimum tariff of 10% on goods from all countries, with higher charges for certain trading partners, for example, 20% for the European Union, and goods from China will incur a tariff of 34% on top of the existing charges of 20%, making an effective tariff rate of 54%. Now, after this news, we saw dramatic sell-offs in equities, with the US equity market leading downwards. We also saw government bond yields fall and prices rise. But focusing on those movements in the equity market, we've seen some pretty notable increases in volatility. For example, markets gyrated dramatically on rumours that surfaced about a possible postponement of the tariffs for 90 days before that news was dismissed as fake. But given this market backdrop, Mike, how are we positioned?
Well, coming into this, we were positioned somewhat defensively in that we were underweight US equities and overweight cheaper equity markets such as the UK. The principal reason for that was really down to price and valuation. The US has had a really strong run in the last couple of years, and the valuation multiples look pretty high. So we were underweight that, preferring to be exposed to markets and regions on lower multiples, not just in comparison to the US, but relative to their own history. So the UK, for example, is not just cheap compared to the US market, but it's cheap to its historic range, where going back historic valuation range. So that was one way we were trying to have an element of defensiveness within portfolios. That was not foreseeing this tariff volatility that's just arisen, because while tariffs clearly were on the cards, neither anyone else really expected anything quite as bad as has come about, and the market effects from it. The key message at the moment is to avoid panic. Good investment work starts with good financial planning, first of all. None of our clients should be exposed to risk or excessive equity weightings that are not suitable for their own circumstances. So our clients are not forced sellers into this volatility, and that really should be avoided. Historically, trying to time markets proved very expensive. If you look at the MSCI All Companies World Index over the last 25 years, the average annualized return has been 5.9% per annum. If you were to miss out on the best 50 days in that 25-year period, your average annualized rate of return is minus 1.7% per annum. Now, trying to capture those best 50 days, invariably the best days are the days immediately after the worst days. So if you will risk off or trying to avoid risk, you'd also avoid those best up days, effectively eliminating your longer term returns. So good financial planning and stay the course and not time markets, we think, is critical to good long-term investment.
And that's important, isn't it? Because we're investing for long-term timeframes. We're not trading, we're not reactionary. We're trying to build longer-term, robust portfolios for investment timeframes that are suitable for clients. So I'd just like to add as well what our sort of expectations going forward. Now, clearly there are a few scenarios here where we could get an escalation of these trade wars, particularly between the US and China. Very strong rhetoric coming out of both parties here. But there's also the scope that these could get reined back a bit. Trump may be using these as part of a negotiation tool to get deals for the US, which gives a bit of a compromise for other parties. But what it has for us is driven is a bit more volatility and uncertainty around the growth outlook, not only just for the US, but globally as well. There is a risk here that the tariffs are an inflationary, they'll bring increasing prices for people, that inflation in the US would increase. It could also be detriment to the US growth outlook. So we could at some stage see an element of stagflation.
Yes, of course, Richard. So stagflation, of course, being a situation where you've got persistently high inflation, but at the same time, the growth is particularly sluggish. And the trouble with stagflation is that it's actually very difficult for central bankers to successfully put economies back on track and get them out of that situation.
Exactly,
So that would
yeah.
be a
So
worry.
very tough for the US Federal Reserve at the moment, because clearly they need to reduce interest rates to help sustain growth, but then they're going to need to keep interest rates quite high to fight that inflationary impact. So they're quite very much stuck in a bit of a rock and a hard place at the moment.
So what that means from a central bank perspective, it's very difficult to find a way out of a potentially difficult economic backdrop here, because central banks don't necessarily have the tools at hand. But coming full circle on this, who does? Well, come back to the White House and back to governments, and actually negotiating trade deals rather than killing global trade can be a very quick way of reversing some of the issues we've seen. I think many of us understand what Trump and the US are trying to achieve, but it does feel like they've gone about it in a particularly aggressive way, which clearly has frightened markets and caused a lot of volatility. We're seeing significant volatility in markets, which are presenting some opportunities. And rather than being particularly pessimistic or optimistic, we're just trying to be realistic and seeing what's in front of us. And they are, like I say, there are opportunities as a consequence.
So to summarize, I think the importance here is really just to stay calm, not panic.
Exactly.
Look to the medium term and take opportunities as and when they might arise.
That's great. Yeah.
Thank you so much for listening. For more information, please go to brooksmcdonald.com.